Hello everybody, welcome to token analysis number 7. This is Uniswap, a huge favorite of many of you out there. So as usual, without any waste of time, let's just jump right in and tackle this beast. Obviously, those of you who know, I'm extremely passionate about all things DeFi, and this is the pinnacle of the space. But as usual, channels about math, money, and freedom. And disclaimer, this is not investment advice. Please do your own research. So we go through our usual token valuation process. For those of you who are new, we basically look at what it does, the ranking, what industries it disrupts, value propositions, technology, tokenomics, one of the most important areas, the ecosystem, growth and longevity, risks, and price prediction. Obviously, as usual, I've got detailed timestamps below, so you can check those out too. So let's talk a little bit about what it does. So Uniswap is a Dexs, or decentralized exchange, for automated liquidity. And it's built completely on Ethereum. And it's extremely simple to use. In fact, it's just a joy to play with. And users connect to the exchange via a supported wallet, such as Metamask or a few others. And they can exchange cryptos with a pool for a fee, supply cryptos to a pool to collect those fees. And there's no sign-in, no KYC. Trading is permissionless, anonymous, and extremely market efficient, which we'll talk about later as well. So let's look at the background of the actual organization. The founder is Hayden. He's a mechanical engineer. And he is an early leader in automated market maker technology, and he was voted the most influential in crypto in the year 2020. Now, the Mainnet was launched in 2018, but the first token wasn't launched until 2020. And his vision was to create an accessible and open source financial infrastructure that's open to and equitable for all participants. Extremely honorable mission, I must say, very impressed. So how does it play? Obviously, it seeks to be the most accessible financial infrastructure. There's no makers, no takers, or use of bid asks for price discovery. Instead, it relies on liquidity pools, which are pools of assets that trade between crypto pairs. And seeing is believing, but when you jump in there and see how it's actually done, it's quite incredible. And price is determined by the ratio between the pairs in the pool. It sounds so simple. And why does this only exist now? And why is this so disruptive? Well, we'll see. So Scorecard Ranking, where does it rank? When I put this together, they were ranked number 11, right after ICP. And now they are ranked number 10 of the charts. But number 16 behind them is XLM, or Stellar, as you guys know very well. You got Pancake at number 40, way down the list. And a bit of a threat, some would say. Other ones, Thorchain, SushiSwap, Synthetics, Bancor, Ox. But from all of them, you can see that Uniswap is the beast, is the 800-pound gorilla. Their market cap is 15 billion, compared to the next in line, Stellar, about $9 billion. So let's look at and talk about industry disruption real quick. Obviously, Uniswap is leading the Dexs, the decentralized exchange industry, and they own about 57% of the trading volume as of May 2021, which is substantial. That's almost 2/3. Now, let's talk a little bit more about some of the other players. Uniswap leads the Dexs industry. They nearly have $7 billion in total value locked, again, as of May 2021. And next one in line is Curve Finance, and then SushiSwap is number 3 with about $3.5 billion, about half that amount. Now, in terms of industry disruption, let's take a step back and talk about the traditional centralized exchange industry. The monthly volume on decentralized exchanges as of April 2021 is about 122 billion per Masari. So you see it's big industry that can be disrupted very quickly. So let's take a step back and talk about what I call the fee wars versus Dexs. This was an interesting article that just popped up today, where Robinhood are touting their commission-free trades to take a piece of the Coinbase business. Now, one of the problems with Coinbase, with Robinhood, is you can't download your crypto, and you can with other exchanges. But what they're touting in their little press release is when you buy $100 worth of Bitcoin, you get $100 worth of Bitcoin with 0 transaction fees. Now, one of the things that people may ask is, what about the spreads? Well, the spreads on Robinhood are actually quite spectacular. I've looked at real-time spreads and buying of Bitcoin on things like Robinhood and Coinbase Pro, Binance, FTX, and they come closest to FTX in terms of spreads, so they're quite impressive. But what's really interesting is the Coinbase fee is about $3 or 3%. Gemini, same thing, 3%. Venmo, 2.3%. And on Uniswap, traders can swap tokens for 0.3%, which is 30 cents for every $100. So you can see here part of the disruption that's coming into play. Now let's talk about some growth opportunities. Obviously, Dexs have seen an explosive growth. They didn't exist a little over a year ago. And now they're handling over 122 billion in transactions. And that is up 122 times from what it was a year earlier, which is staggering. And as of August 30th, 2020, Uniswap's daily trading volume actually surpassed Coinbase Pro, which is the largest centralized cryptocurrency exchange. So that gives you an idea of what they call the flippening and how big and how fast these exchanges can actually grow and disrupt the legacy players. Let's talk a bit about value props. Obviously, it is permissionless trading. Security, unlike traditional exchanges, users don't hand over ownership of any assets to the exchanges or any third party. Market efficiency, it is extremely efficient in terms of market, and because they have a feature called constant product market maker and concentrated liquidity functions to really help that capital efficiency within its pools. Very, very impressive. Now, the technology and developers, the 2 key features which I just touched on, are really the key innovations that Uniswap has brought to Dexs. And it allows for things like price discovery. It adjusts the order based on the size of a pool, so the pool never dries up. And arbitrageurs can trade with Uniswap if prices are incorrect, automatically removing any inefficiency in the actual market. And liquidity providers are incentivized to bound liquidity range. So it's basically a whole self-controlling mechanism, which is very, very cool indeed. Now, tokenomics, one of the most important things to always look at, is Uniswap didn't launch a token until September 2020. And they only did it because it was in response to competition. And the usage of UNI, which is the token, is as an incentive for liquidity providers who earn UNI for providing liquidity. And 5 million tokens are allocated to the pool. And it also acts like a governance function. So holders can vote on how to allocate UNI tokens, partnerships, initiatives, and community proposals. So it is very open and truly, to a large extent, decentralized. Now we talk about tokenomics. There are 1 billion tokens minted. 60% of that token supply is for the community, and 40% goes to the team, investors, advisors, with a 4-year vesting. And that vesting period ends in September 2024. And that's important because I use that in my calculations as well. And after 4 years, there will be a constant inflation rate of 2% per year, which will act as staking rewards. So no real red flags there so far. The ecosystem, Uniswap emphasizes shared community ownership and a very vibrant governance system, which is important. And the team has stated they don't want to be involved in development of the protocol, ordering, or other matters. And they want to seek out experts to help build out a better network as they go forward. Now, the ecosystem, a quick, simple way to explain it, is basically its beauty is its simplicity. The Uniswap ecosystem is primarily comprised of 3 types of users. You have your liquidity providers, then you have your traders and developers. So liquidity providers are incentivized to contribute ERC20 tokens to the common liquidity pools, and the traders can swap these tokens for one another for a fixed 0.3% fee, which we covered earlier, which goes to liquidity providers. Now, developers can integrate directly with Uniswap smart contracts to power new and exciting interactions with tokens. trading interfaces, retail experiences, and so much more. So again, it's like, why didn't this exist before? It's just so perfect in its simplicity. Now, the longevity and track record, humble beginnings. It launched in 2018 with no ICO, like we covered. Uniswap itself has cultivated a loyal, passionate community. And in August 2020, Uniswap had its Series A funding that raised $11 million, which is actually very little compared to some of the other fundraising. And they are funded by A16Z, USV, and Paradigm Capital. And as we covered as well, 6.6 billion is locked as of May 2021. Now let's look at some of the risks. Now, first of all, competition. There's very little differentiating the service that Dexs provide. You look at what PancakeSwap has done. In fact, PancakeSwap actually cloned the code base for Uniswap. So there's very low barriers to entry, and open source protocols allow new entrants to pop up consistently, which can be a problem. It's also Ethereum dependent. Uniswap is only compatible with exchanging Ethereum-based tokens, which could be a limiting factor in the future if there is an ETH killer. Regulatory risk, probably one of my biggest concerns, is centralized exchanges are heavily regulated despite some of the shenanigans that actually happen out there. But Dexs are completely unregulated. Now, if the regulators came in and put a stop to all activity, that would mean very bad things for your token price. Other key aspects, point number 4 here is DEX aggregators. Protocols like 1inch aggregate many DEXs and pick the least expensive one. So basically squeezing them all over time. And it commoditizes Uniswap's service, and it puts a lot of pressure on the fees. So that could be dangerous going forward. Now let's look at price prediction. Obviously, when we look at the chart, first of all, it's grown from $4 late last year when it launched to an all-time high of over $46. But it got taken down in the draft. And this is when I got into my first position on FTX. So I actually picked up my first UNI a little over a week ago. So I thought the price was irresistible. And it was, because it's over $28 right now today. Now, the top 7 analyst predictions, I pulled in predictions from CP Forecast, Wallet Investor, Trading Beast, Coinpedia, Digital Coin, Gov Capital, Long Forecast. And their prices were kind of a little bit aggressive in the early years. So you look at groups like Gov Capital going to $315 in the year 2025, Coinpedia $282 in the year 2025 as well, and Wallet Investor $245. All of these numbers are kind of on the high range. Now, the key real numbers to look at, I liked the CP Forecast because they seem to be most in line with where I was coming from. And we'll look at my price predictions as well. But what I did is I took an average of these top 7 predictions and came out with a 2021 price prediction of $48, which is very close to the all-time high, by the way. Next year, $75, depending on where the bull run goes. 2023, $95. 2024, $121. And 2025, $175. And the CP forecast in 2030 was $170. So some interesting numbers there. But let's go a little bit deeper and look at me and my model and how I price this out. So first of all, I calculated the average value of all exchanges, including Coinbase, and compared volume to get a relative valuation based on other exchanges. And I also looked at the volume that Uniswap runs. And today, that's a third of the volume that Coinbase runs through their network, although they flipped them last year, which we covered. So basically, that gave me an average, considering the volume, market cap should be about $27.25 billion. I looked at other metrics like revenue and monthly users, not really comparable because of the nature of this particular beast. But again, I tried to find all angles. The second step, I looked at the trading volumes, as I mentioned before, and the growth rate So the growth rate for Uniswap is 220% every 20 weeks, which is staggering. But to be conservative, I assumed 100% growth rate per annum for the first 3 years, and then 15% growth rate thereafter because of maybe increased competition and other factors. I also calculated the number of tokens released from 40% of the pool and the 4-year vesting plan and the 2% inflation give me my price prediction. Best case, assuming no competition beyond what they have today and the growth rates like I stated. And of course, as these Dexs grow, they'll start eating market share from the other exchanges. So in 2021, I calculated $28, which is coincidentally based on the volume today and the growth rate, and it's actually the price today. And I can't make this stuff up, but this is my conservative price prediction. Next year, again, $48 because of the intense growth rate. 2023, $62. 2024, $83. And then 2025, $91. And the reason you see the growth slowing, even though the business is growing, is because of increased competition. And out to 2030, I have a price of $166. So more interestingly, what I did was I compared my analysis versus the 7 analysts and calculated the average of them compared to my prices. So you can see that my price for 2021 was about 38% lower than the analysts, 2022, 33%, 2023, 30%, and 2025, I was 44% lower than the average of all the analysts because they were skewed heavily by Coinpedia and GovCapital. Now, that being said, what was really uncanny is when you look at my price prediction based on my model, I came up with $166 for the year 2030 without even referencing or seeing the other analysts that happened after the fact. And that is 1% off of the CP forecast model, which I thought was kind of uncanny. Again, I always like to be conservative and sandbag these numbers as I go forward. So people might not be very excited by that. 10 years out, we go from $28 to $166, but that's because of the nature of the business, open source nature, competition. It's very easy for them to step in as well, and a whole host of other factors. So jumping quickly into the conclusion. For those Uni fans, and again, to reiterate, I am a holder of Uni. So Uniswap is one of the most disruptive projects on Ethereum. The growth rates are unbelievable, and they're changing the way we think about markets and exchanges. And it arguably has launched the DeFi revolution, which I'm extremely passionate about. Its innovative technology allows for decentralized permissionless trading that can be done very securely and very efficiently. Again, once you try this, once you do it, you think, oh my goodness, why do I do things the old way on centralized exchanges? It is really, really radical. Now, while it has seen explosive growth with the launch of its Uni token and V3, there are significant challenges in terms of competition and regulatory risk that I stressed under the risks before. So my suggestion is we should wait for regulation and the competition environment to play out. I like buying it under $20 or under $25 and enjoy some speculative run-ups. But I think the next 12 months or so, it could blast to $100. You never know. And I think it's a prized possession if they can sustain their unique position, their leadership position. Now it's a top 10 token. And that is my conclusion. Again, I own it. I believe in it. It's fascinating. Its beauty is in its simplicity. I like the way the team is organized and structured. I like the tokenomics. But we'll see what happens with regulation and competition. They're the two big factors that have me a little bit concerned. As usual, big thank to everyone on Patreon. It's a wonderful, wonderful, wonderful community we work with every day. And I'm in there every day, sharing everything that I know. And if you like this content, hit the like and subscribe. Thank you, everybody.